I want to spend time talking about all that I've learned building a sourcing engine for buyers of businesses, and how we've gone about doing it a little bit at Axial. I also want to talk about what we've seen the very best do in the world of sourcing, and what we've observed and how we've learned from our customers, and what we think is sort of fundamental to excellence in sourcing. The longer your time horizon as an acquirer of businesses, the more you can lean into these methods. The shorter your time horizon, you have to make trade-offs, and so what I've tried to lay out here is what I tend to think of as some of the very best practices, some of the very best approaches, and it rhymes with what you guys probably saw downstairs with Josh. And you don't just go from zero to what he's laying out down there in terms of playbooks and operating principles and execution quality. It's a process, and it's a lot of hard work. Even if, like, Josh tells you how to do it, it's a lot of work to do that. And I think sourcing is similar. It takes work. It takes a lot of work, and you have to really want it. So for those of you who are already in the hunt and committed to an ETA chapter of your career, I think that's fantastic. I think those of you who are thinking about it, I think the most important thing for you guys to understand is that even though it's having a little bit of like a moment, as being like a really interesting and somewhat fashionable and popular thing to do, it's going to take a lot of hard work to be great at it. And so think carefully about how seriously you want to pursue this path, because it's hard work to operate a business at the level that Josh is recommending, and it's hard to be great at the sourcing game, which is kind of where it all starts. So with that, let me just lay out like a couple of things for you guys to understand just at a data level. So the chart's not particularly high fidelity, but the market share of sell-side brokers selling businesses in the lower middle market, the very highest production brokers are a tiny percentage of total market share in the market. Meaning you can't just meet 10 brokers and have like access to 70% of the deal flow in the market. It's a hyper-sharded market of sell-side sources of deal flow. And that creates a lot of challenges. That long tail creates a lot of challenges. So basically, what this is showing here is just like, the top firms are sort of going to market on any given year with not more than, maybe 75, 100 transactions. And last year on Axial, there were 10,100 attempted transactions. And we represent, I'd like to think we represent a lot of the market, but we don't yet. There's a lot more out there that we're trying to hunt down on behalf of our customers like you. So that's a quick picture on just how long the tail is on the sell side. This is a quick summary of the buy side on Axial. So this is just Axial data, and the prior slide was Axial data as well. They're decent proxies for this market. So 60% of buyers on Axial are strategics. Within that strategic buyer category are a lot of private equity owned businesses where the business has been bought by a private equity firm, and now that business is itself making acquisitions. And then there's a whole bunch of other sort of categories here. But anyway, just wanted to make sure you guys understand that the buy side and the sell side, both on Axial and in the real world, are super fragmented, and that just kind of lays out the context for what you're up against and sort of how you need to think about winning. So this slide here, I know it's a little bit text heavy, and some of these are going to be a bit text heavy because I didn't have my Steve Jobs inspiration for this talk. I wanted to just try and lay out some good data for you all. But for those of you who have been in sales, the way that you think about things in sales, you think about territory design. You have to design territories well for a rep. And in sourcing deals, there's actually a lot of things that you can sort of crib from territory planning for a sales force. So in the world of small business acquisitions, call it like, $10 to $100 million, $5 to $100 million transactions, you have we tend to think about sort of three tiers of M&A advisors and brokers. And there are many ways to cut the pie. What I shared here is essentially number of deals being executed per year, the number of like managing directors at those firms, like how many producers are at those firms, and then the relevant sourcing strategy for you on the buy side, thinking about which ones you want to interact with. So if you're very specific in a certain geography, if you're very specific in a certain industry, you want to think about your territory in a way that reflects that, right? If you're industry agnostic, you have to appreciate the fact that you're not going to be at the top of the list for certain specialist brokers. If a specialist broker sells dental clinics, and all they do is sell dental clinics, or all they do is work on selling HVAC, and you're a sort of industry agnostic buyer, you have a bit more of a hill to climb than someone who's a specialist in that category. So when you look at the market of brokers, the market of investment bankers whose radar you want to get on, you have to be thinking, okay, who am I? What is my thesis? What am I looking for in the way of opportunities? How specific can I be? And then how do I want to design like a coverage plan to cover these brokers in a way that maximizes my return on time? So the brokers who are most active either in the industries or the geographies where you want to transact are the ones you want to spend probably the most amount of time building a direct relationship with. That is where you should not rely on Axial or newsletters or anything else to sort of like make things easier on you. You want to lean into the part of the market where there's the greatest amount of repeat yield in the form of opportunity flow that's relevant to you. And then you need to sort of think about what's your coverage plan for the rest of the market. That's what we see a lot of people do with an offering like Axial, and that's maybe intuitively what a lot of you will figure out, right? There's a pocket of highly relevant counterparties who you want to build direct relationships with, and then there's the rest of the universe where there's a low likelihood that they will share the right opportunity with you. But in the event that they do, you want to be in the right place at the right time. That's a little bit maybe what happened with Sam and this opportunity on the West Coast. Sam runs a fencing business. Many people know that he runs a fencing business. Many people know that he's looking to acquire fencing businesses. And so he has direct relationships with people that are bringing those businesses to market. And he's working on covering those opportunities proactively. But there's a long tail of opportunities that may not hit the radar as well as he would like them to. And so he needs a plan to sort of lean in where he thinks he can, and then be able to have some like insurance plan or something like that that covers the remainder of the market as best as he can. Let me try and explain this a little bit to you. So this is data from Axial. I'm not trying to put Axial too front and center, but it's illustrative of something important. You know, when you are in the ETA buying category, you are up against private equity buyers, strategic buyers, independent sponsors who may have had a track record of where you're buying businesses. You're not at the top of the totem pole. And it's important that you find a way to get competitive relative to these sort of more predictable, more understandable, more well-established forms of capital. You need a winning motion because you're in a crowded market to begin with, and you're not obviously at the top of the totem pole. And so what this basically shows you is that, at least on Axial, there's a huge spectrum of methods by which the brokerage universe, sell-side brokers, investment bankers, sell businesses using Axial. Some share the deal with every recommended buyer that we recommend to them on the platform. They trust Axial. They say, I'm taking XYZ business to market. Show me Axial who you recommend based on your data, and we will share it with them, and we'll take the conversations from there. Many of them don't do that. Many of them say, I'm only going to share it with people that are in this geography, or people that are not private equity, or I actually have a client who really wants to sell a business to a searcher. They don't want to sell to private equity. They don't want to sell to a strategic. They want to sell it to the son or the daughter that they never had. So the search fund market is actually very relevant to me, right? So there's a big gradient of approaches that the sell side uses to approach the market of buyers, whether it's ETA or otherwise. What this is showing you is that as the number of buyers that are approached by the sell side goes down, their openness to receiving inquiries goes up. So when a seller says, I really want to run an ARA process and I only want to share it with these kinds of buyers, they can do that on Axial. And what we allow on Axial is for you to then, if you're excluded from that process, for you to essentially write a love note and say, hey, this is why I'm interested in this business. Would you consider inviting me into the process? What's interesting is that the more selective that they are, the more open they are to a really good inquiry, right? And so what I did here was just kind of lay out the inquiry acceptance rates for you. So you can just see, like, the search fund inquiry acceptance rate, even though it's the lowest, if you write an inquiry that's compelling to the sell side on a deal that you're excluded from, you have a 46% chance of being invited into the deal. So just doing the shoe leather of working on a turn, just as opposed to just pushing buttons and blasting emails and clicking on anything on Axial or BizBuySell or whatever, just doing the shoe leather, putting in the work, sending a note to someone saying, hey, I'm a searcher, I'm Texas-based, this is a really interesting opportunity, this is my connection to it, this is my angle on it. The more thoughtful that sort of shoe leather is, the higher the likelihood is that you can get into transactions where you're being excluded because the broker is nervous that a search fund doesn't have any capital, or they're nervous about putting you in front of their seller because they think you're not a qualified buyer. You can work your way into these processes.
Hey, Peter?
Yes.
Sorry to interrupt. Quick question. On the
Yeah.
breakdown of the search fund, is that all traditional search funds or self-funded search?
Oopsie. Good question. We combined.
Can you repeat the question?
Yeah, so the question is, for those of you, so the question was, what kind of search funds are being expressed in this category here? So there's, roughly speaking, there's sort of two forms of search. There's traditional search, which is you raise capital for an 18 to 24 month period from investors, and you use that capital to go and fund a search. And then there is what's typically referred to as self-funded search, where you're not really raising outside capital until potentially you have a transaction on hand, and then you're raising some outside capital alongside the debt. So in this category, we consolidated both, but the largest category of search fund activity on Axial is self-funded. It's not traditional. We have both, but it skews meaningfully towards self-funded. So here are some themes related to sort of how doing stuff that doesn't scale, investing in relationships, doing outbound that isn't blast outbound actually pays off on Axial. So we looked at 8,600 inbound inquiries where the buyer was excluded from the deal initially and then was accepted into the deal as a result of their inbound request. And basically, the way to look at it is, or at least, a handful of ways to think about it is authentic personal messaging works, a sector fit or a thematic expression of why you're interested works, some form of tailored expression of why you're interested in this specific deal and you're not just window shopping like the next guy works, institutional credibility. So if you are backed, if you have a family office that has decided to back you, share that. Use your assets, but remember, the broker is in a position where they have a limited number of buyers that they can ultimately put in front of the seller. The broker doesn't get paid unless the transaction closes. So put yourself in their shoes. They're trying to figure out, how do I assemble the best, most credible audience to buy this business? So work backwards from the shoes of the seller, work backwards from the shoes of the broker, and it leads you to a series of ways that you can work your way into these transactions that are more complicated to access. So that's like a bunch of data on buy side, how crowded it is, the sell side, how crowded it is, and some data. I wanted to try and consolidate it. I know there were 4 pillars downstairs. I only have 3 pillars, but it seems like a pillars best practices day that you guys have to suffer through. I tried to sort of consolidate the ideas, the methods into sort of 3 areas: memorable online narrative, credibility and reputation, and then having a data-driven and software-enabled approach to your search. And so just go into each of these a little bit. What do I mean by memorable online narrative? So this is a acquirer in the pet category. Some of you guys know him personally or have heard of him or listened to his podcasts. He's, I think, an Acquisitions Anonymous podcast host, or at least part-time speaker. Everyone, like, Bill has worked very, very hard to be synonymous with pets and pet products, right? So when you're selling pet food businesses, when you're selling pet product businesses, there's strong synonymous recall between Bill and that category, right, in the small business market. There's a lot of brokers who know about him now. He's easy to find online. He's worked hard to create content. He's built a whole thesis and committed a holding company only to this category. And so when you when you make that choice to niche down and be precise and specific, it really, really helps. If you look at what Josh and Reg did with Canacast, right? They became known for Foundries, right? In America, it was like Foundries, those two guys. It's like synonymous, like very, very clear relationship. So I'm not recommending that you commit to some esoteric niche that's not exciting to you or is too narrow, to you. And I understand that when you commit to a niche, you get nervous that you're going to like miss these opportunities that are maybe sort of outside the niche. But the more that you can develop a theme or a thesis around your search and get excited about that and become synonymous with it, it really helps you. It really helps you figure out where to spend your time, who are the brokers that you want to meet with, who are the sellers that you can, that you can develop a relationship with. And the wider that your search is, the harder it is for you to sort of know how to set up your territories and think about prioritizing your work. So, you can, and you can make your niche whatever you want it to be. I mean, I have a friend who just left a private equity firm in New York. He spent a huge amount of time investigating flavors and fragrances businesses when he was at this company. His search fund is, sort of focused on that market, chemicals, flavors, fragrances. He's really knowledgeable there. He's instantly credible, even though he's no longer with that private equity firm. Other people are 100% focused on something geographic, but build around something that's clear and precise as best as you possibly can. It makes it easier for people to remember who you are, to think about you at the right points in time. The commitment to a niche also makes it easy for you to think about like what content can you produce. So the more that you commit to a niche, the more you can then think about what is the content that you want to put out there that's interesting and relevant, and you can become known for. That. A guy DM'd me on Twitter the other day, and his Twitter handle is HVAC Jack, and I don't really know him all that well yet, but like. It's HVAC Jack now. He's in my mind. He's got like if someone talks to me about HVAC, I'm probably going to start thinking about him. So just the more you can sort of appreciate the importance of like, this is how brands build great businesses. Think about yourself as a brand. Think about yourself as a product. You need to stand for something. It needs to be clear who you are and what you're going after. Don't think of yourself as like this industry agnostic, geography agnostic, just opportunistic. You can't afford to do that. You have to get more precise about who you are and what you want. So we have like 100,000 page views a month on Axial just because we published a directory for all of our members. So as a member of Axial on the buy side or on the sell side, you get free traffic by just having a profile on Axial. And it's SEO optimized, and we spend a lot of time on it. It's a great form of leads for us. But my broader point here is make sure you have a website, make sure you have an excellent LinkedIn page, make it easy for people to quickly find you on the internet. Don't hold your cards close to your chest. Don't do a stealth search. Like, people need to understand who you are, and you need to make that easy for them. And I love this example because, for those of you who follow Blackstone, it started in the 1980s, and for a very long time, I think it was just this very staid Wall Street brand. And in the last handful of years, I feel like they've just done this incredible job of becoming way more accessible, way more creative. They have this hilarious annual video that some of you may have seen, but they're totally outmaneuvering the sort of old school legacy Wall Street brands with this approach, and it's allowing them to have access to great entrepreneurs, The technology market is a place where they've made a huge number of investments. So Blackstone is a perfect case in point of someone that was legacy Wall Street, blue blazers and coats and ties, leverage buyouts, all of this, and now they're making a bid for TikTok. They've been able to shift the brand in the direction where they want to build a pipeline of deal flow. And so they're obviously operating on a scale that is, far larger than anybody in the lower middle market beyond, ETA or private equity ever do. And you can sort of see how somebody who's, over here and looks like, like a New York Wall Street guy is not taking himself so seriously. He's getting incredible reach by taking that risk and thinking carefully about marketing. That's not something that costs a lot if you have the right creativity to do it. So, what I did here was just headline a number. So we looked back at all the closed transactions that were successfully closed on Axial in 2024, and we tried to just sort of group the ones that we thought had reasonably strong to good online profiles and online narratives. I don't know if it's causal or correlated, but 3/4 of transactions were closed by people who have discoverable, understandable, accessible online profiles and presences. Okay, for those of you in the world of ETA, you probably sort of are often thinking well, what do I do? How do I merchandise myself? I'm not like someone who's done a ton of transactions already, and how do I make myself as credible as possible? This is a really interesting story of an incredible woman who I met actually in Texas a few months ago, and I interviewed her on my podcast. But Hagen was a pure play operator for the first decade of her life. She was working at Terminix and Pest Control and Service Master, corporate background. But it was super clear to anybody who was looking at Taylor's background when she decided that she wanted to go and start a home services roll-up in IT smart home automation. It was super clear from her background that she'd been in franchising, that she'd worked in this in these categories before. She made it very, very clear that she was an outstanding operator in the category. And so what you'll find as part of the search is that some parts of the market really are interested in working with financial players, and some parts of the market are really excited to work with operators. And so point being, don't sell your background short, even if you haven't closed transactions, you don't have an investment banking background. If you have an operating background, use it. It is very, very attractive to a large number of people selling businesses to talk to operators and not to talk to finance people. And once you move through, once you make your first acquisition, put yourself out there, start to show that you're transitioning from sort of an operator to somebody who can make acquisitions. But I want to make sure that it's clear to you that a huge part of this market is very excited to sell a business to an operator who's never done a deal before. That's a very, very credible preference that a lot of sellers have. Clint is here. Maybe we can talk about this after I wrap up. But Clint's a professional who's sold a ton of businesses in this market. He will affirm what I'm saying, which is that if some overly financed type of person shows up to a small business management meeting, it's usually like the kiss of death in terms of them winning the transaction. And when someone shows up in blue jeans and has a history of being a credible operator, it's a pretty good look. So just make sure that you're not underselling whatever your resume is and whatever your background is, and sort of thinking I don't really have too much to go on. Whatever your operating background is, make it as visible as possible. And then as you start doing transactions, make sure that they're super visible. This is sort of more of the same, but I think what's so different about this market today versus when I started Axial. I started Axial in 2009. After the world practically ended with Lehman Brothers and stuff, and I stepped out of a private equity career path. Back then, there was this market didn't read blogs, there were no podcasts, SMB Twitter did not exist. There was no way for you to go and cultivate an online audience back then. and nobody was revealing their playbooks. There was no such thing as like Josh sharing a playbook. Everything was close to the chest. It just was a very, very different world. Today, there's so much out there that you can access. There's so much that you can contribute to. There's so much that you can be part of. And so you have the tools to sort of cultivate a reputation and cultivate a memorable narrative and credibility around yourself. It's much easier today than it was, back then in that regard. And I think that's part of the reason. I think that combined with the fact that there's so many business owners selling their company in the next 10 years, I think that's why ETA is surging so much, just to meet the demand. What I'm showing here is just another one of those tables that basically just shows that, like, the more that you can show online related to operating credibility, transaction credibility, the more likely you are to be taken seriously by the broker. So the more you hold things close to the chest, the less you work on your visible, discoverable, sort of externalized online narrative, the harder it is for you to sort of work your way into these processes and to be taken seriously. Okay. This is almost like a tech stack that you could crib. It's incomplete. Some of these are pricier, some of these are free. I do think it's important that people take advantage of either low cost or free software in order to power your search. I think it is very, very important. And here's sort of a couple of categories where, for those of you who are not aware, just it is worthwhile to do some homework on sort of how are you going to get leverage in the search. You don't want to be managing things exclusively out of Google Sheets, I guess is what I would say. Whatever you do there, you must resist the very tempting desire to just AI bot your search and sort of email blast your search. So what I shared here. This is an email from someone, and they're reaching out to me asking if they can buy the company, and it's all about them, right? It's all about when can I talk to you to determine whether your firm is a good fit for us, right? We have no relationship. It's just spam, right? And I really don't think that good business owners are going to respond to this. I really don't think you would want to buy a business where the owner responds to this kind of outreach. Right? A business owner has run a business for 5, 10, 20, 30, 40 years. Maybe it was inherited from the prior generation. They're going to be thoughtful about who they spend time with. This can't be the top of your funnel. And then I just had some fun last night. I asked Grok to summarize this, and did a very, very good job, which is, the response removed me underscores the email's failure aligning with industry advice on avoiding common cold outreach mistakes like poor preparation and generic messaging. Now, I wanted to share with you what I thought was a really compelling alternative. So, Cam is an associate. He works at a big private equity firm. I think it's a Boston-based private equity firm. And subject line, PSG Axial, priority interest due to alternative assets thesis. So when that's in my inbox, that's it's already more interesting, right? And then if you just, and I can share these slides with Sam or get them to everybody, but it's very clear why he's reaching out to me. This is not a canned email. And I think the temptation with all the software is write generic emails, blast it out, measure open rate, and then kind of work your way through the funnel. The problem and the opportunity is everybody else is kind of doing that now. And so this is the time for you to be more thoughtful. This is the time for you to zig while everybody else is zagging, and for you to, instead of blasting thousands and thousands of emails, take your send volumes down by 90%. Take your customization rate up by 500%. Get focused and get thoughtful. Do the real work, and your open rates will go through the roof. Your reply rates will go through the roof, and like the first impression that you're making with an owner who's thinking about talking to you versus talking to everybody else who's emailing him or her, is you're just in a much better position at the top of the funnel. So this builds pipeline. Axial is not for sale. I'm not really spending, but like if I was thinking about selling the company, like I would respond to him. I'd say, thanks for the email. Like, happy to get to know you and build a relationship over the next couple of years. So I just wanted to show like a case in point of like how big the difference is. And I promise you, like, you know, business owners are getting this kind of stuff. They really are. They're getting the one and they're getting the other, and you want to be in the one camp and not the other. So 3 things, you can build them to greater or lesser degrees over time. Again, like what we just heard downstairs, this takes work. It takes time. You can't mail it in and pull this off. But being visible and being memorable online, building a credible reputation around something that's core and authentic to you, and then using the tools of the internet and using the tools of software today, but using them in a responsible way, works well. I wish you guys all good luck. I'm going to be here the rest of the day. Happy to take questions, but thanks for the time and thanks for the opportunity.